Hey guys, welcome to the podcast that we are tentatively calling
Invest in Huntsville.
Investing in Huntsville. This is our first episode, and it is going to be as loose as a goose, my mama would say, but it will set us up for good things to come.
Yes, I agree. It's such an amazing area to be investing in.
It really is, and it's a good time to do it. I am Tim Knox. I am the owner, broker of Revolved Realty. Also have a little company here called Revolved Renovations. Do mostly flips. And with me, when I decided to do a show on investing, I thought, well, who do I know that knows more than just about anybody when it comes to investing? And I looked across the lunch table and went, oh, damn, there's Zack Childress. So, Zack, your bio is longer than my memory serves.
Oh, man.
Tell folks a little bit about you. Give them the history. And,
no
Zack
problem.
Childress, ladies and gentlemen.
Yep, my name's Zack Childress. A lot of people know me in town from the Real Estate Investors Association, and that I've been the president of for the last 14 years or so. But my investing journey started 21 years ago. I started 21 years ago. 6 months in, I quit my job and became full-time, never looked back. But I've been through crashes. I've been through peaks and valleys and been through Bitcoin and stock market investing, all of that, and still in real estate. But I specialize really in just building wealth, honestly, just single families, apartments. We do warehouses, commercial. We renovate and rehab. We do a little wholesaling, but ultimately we're just in real estate investing for the wealth person.
But you've progressed to that point because you started out. Let's hear your story. Go back to before you became the guy you are now. What got you initially interested in real estate, and how did you go from there to here?
Oh, great question. So 21 years ago, I moved out to the beautiful state of California.
Wow, why?
Was chasing a dream, right? But I ended up at a seminar where they started talking about, hey, look, if you're broke, you have a bad credit score, you have no experience, you can still do real estate, which was complete opposite of what I'd ever been told. You know, I was always told you had to have all this money and everything, but I didn't understand what they were talking about, because they said if you were in a position not to go to a bank and get a loan, you could start with this thing called wholesaling. And back then, it was not as popular as it is today, because back then we didn't have Facebook and YouTube and all that.
You didn't hear a lot about wholesaling 20 years ago.
No, not at all. It was like a very under-the-table type of thing. Not everybody knew about it. Well, I caught on very quickly and realized that it was a very profitable thing. And ultimately what it was negotiating great deals and then just selling our equitable interest in that contract to another cash investor. So we were, in essence, we were the deal finders, and they were the buyers because they couldn't get the deals that we could get. So anyways, long story short, I ended up doing just short of $1 million my first year.
Wow.
And all through wholesaling. And that's when
was that really just beating the bushes and getting out there taking action?
That was it. We did a lot of direct mail back then and a lot of knocking on doors.
Okay.
Like that was our game. I mean, if you think about it, it's the same game that back then agents did, right? And we were just doing it instead of listing, we were going in as contracting to sell the contract. And so that led my journey. And I caught on real quick after that year that I really wasn't building any wealth. It was really a transactional based business. And if I didn't work, I didn't get paid. If I didn't work, and that wasn't why I wanted real estate. When I got introduced to real estate, it was because I saw like hanging out on the beach, sipping on Mai Tais, right?
Do you remember back on the TV days, Carlton Sheets?
Oh yeah, got bought his course twice.
Yeah, who was the Oriental guy that was always out on a boat? Do you remember him?
I know
you too can be wealthy and hang out with bikini girls. That was it, I think. Yeah, something like that. Tom Vu,
or Tommy Vu, or something like that.
Vu too can be like Vu.
Yeah. So I never saw him getting started, but I did see Carlton Sheets.
Yeah,
and
huge.
One of my greatest mentors that really I'm blessed to still be around him till this day from way back then was Russ Whitney. it really opened my eyes. He was really heavy on me about, look, don't stay as a wholesaler, learn to build wealth. And for me, when you think back then, I was in my 20s, like that was so far out there for me because I didn't have capital, I didn't have credit. But he really leaned in on me and said, look, to be successful, if you don't have banks in your back pocket, you need to start finding private investors. Right. And so I spent the next year talking to everybody about private investing. The challenge that I had, and I don't say problem because it was a challenge, is that I was a 20-something-year-old kid, and I was asking private investors to loan me $500,000 to buy a house because I lived in California at the time. So that was a little interesting journey. But anyways, we made it. We got through it. We started acquiring and holding. And then 14 years ago, I was like, I'm ready to come back home. I'm ready to invest in Huntsville. Right. And so we packed up and we moved back here. And by that time, I had now already rentals, rehabbing. I was already doing a lot of stuff. And boy, these last 14 years here have exploded me because I saw something here when other people said I was crazy. I mean, I was buying stuff here when people were like, oh, that's a war zone. Yeah, but just
there's money to be made.
There's money to be made. Like real estate, and you know this, real estate is, the wealth side of real estate is really buying and holding. It's just holding it. It's like you don't go in and look at it all the time. And look, if you can get it to stabilize and get it to cash flow, just let it sit and watch what happens over the next 6 to 10 years. Right.
So you've been doing this a long time, 20 years.
21.
Long time for an investor. You've been very successful. I want to talk about our market here.
Yeah.
Because we, with Revolved Realty, we see it all. We were actually out of 479 brokerages here last year. We were number 17, I believe. So that's a pretty good accomplishment, but a lot of that is working with investors like you. And so I want to talk a little bit about this market because the last year has just been insane here. 20-year low in inventory, high growth, lots of jobs. We are the largest city in the state now. Demand last year outweighed supply greatly. And we are seeing that slow down. But as a flipper, someone who flips, that's my forte, it was really hard to find anything to buy where the numbers worked. I don't think I flipped my first house until June or July. So what did you see here last year?
Well, last year was another record year for us. 2020 was an amazing year. 2021 was another great year. 2022 was even a better year. But, you got to also, like, we're deal finders. Like that's what we do. And so, yes, we love working with agents and properties on the MLS. But like you said, during the last couple of years, if we're to be honest, it was almost impossible to find deals on the MLS unless you used a trifecta strategy. And so,
which is?
I'll get into that in a minute. So what I'm saying is so part of being a great real estate investor is understanding how to have multiple tools in your tool belt. Because if you're just like everyone else where you just look at a deal and you say, can I buy it low enough to make profits? Then you're only really presenting one strategy into the marketplace. But when you understand multiple ways, as we say, being a transactional engineer, it allows you to be a little bit more creative in the marketplace. And so, for example, we work direct with sellers a lot, and we're able to get really great deals that way, and we were able to keep deals coming in versus the MLS. But in some cases, when we're looking at the MLS, we do have to strategize with a trifecta. And what that means is we're looking at the property as a flip, but we know we can't buy it low enough to flip it now. So we treat it as a 3 type of payout. So we start it off when we go in and we say, look, if we can buy it now and get it to stabilizing cash flow, let's rent this thing for a year. We create a deposit, we create cash flow off of it for that year. And then let's see where the market is in 1 year from now. And then if it's better, we don't renew the lease. Now we go in and fix it up and put it back on the market. And we did that with several properties that we're now circling the end of that year lease. And amazing it is because the prices have all gone up. Now we've stabilized it for that whole year to create cash flow. And now we're getting ready to put them on the market and sell them. So that allows you as an investor, if you run it in that model, to compete with other investors because your intention isn't to go in now, buy it low, and sell it.
Right. So basically what you're doing is, like, for example, I'm a flipper. I want to buy it, fix it up, sell it, be done with it.
Yep.
And that was hard to do here last year
very.
because not only were people overpaying for retail real estate, but they were overpaying for flips or remodels. I remember going to auctions and just standing in the back, and I knew what the house should go for, and it would go for the ARV value, and there was just absolutely no way. But what you're saying with this trifecta, is that 3 quotes?
Yeah,
Trifecta. So even if there's no room to buy and flip, you buy, repair, rent out, let the market mature, your equity build, and then you can think about selling it and cashing out.
100%. And the reason that, and we don't use that in all markets, but in a market like we came out of, kind of in the market we're in right now, but we're actually starting to see a lot more opportunities right now than we did last year. We're always looking at how do we keep acquiring. And so when you're looking at how do I keep acquiring, sometimes you just can't be a one-trick pony, as we say, right? You have to be able to have multiple ways to turn something into a deal that may not be a deal. And that is a lot of just knowledge base. This is why we have the RIA here locally, is because
that's the Investors Association.
It's the Investor Association that is its sole purpose is to help keep educating investors how not to be a one-trick pony, right? And it's sad, but that's what a lot of people go into the market doing. They got one theory, they got one strategy, and they got one execution, and it limits them for what they can do and what they can pull out of a market.
One thing that we see a lot are people that they're not and I'm doing air quotes again, they're not investors.
Yeah.
They are someone who's watched a video or seen an HGTV show or been to the Bigger Pockets website, and all of a sudden they decide, hey, real estate investing is for me.
Yeah.
They don't have a clue. They call us up, and it's quickly evident that they don't have a clue. So let's talk about the from your standpoint, doing this 21 years, knowing what you know. If I'm someone who is interested in getting into investing, especially here in North Alabama, what should I do? I would think the number one thing is to educate themselves, isn't it?
Well, I agree. So in today's world, as the president of the RIA, I see it constantly.
Sure.
People do it backwards. And our purpose is try to help people build a plan that is actually an executable true plan. And what I mean by that is most people, they watch the TV, they watch the YouTube videos, they go through all this stuff, and they just want to run out and start looking at houses.
Right.
And the problem with that is that's the fun side of real estate, but it gets real quick when you're on the property and your agent or whomever says, let's make an offer, and they didn't do any of their foundation work.
Right.
And so as a coach locally, I'm constantly slowing people down and saying, stop looking at houses, because we believe in this strategy of understanding there's a process to real estate investing, and it's not complicated. It's complex, but it's really not complicated. And it starts with the foundation, which is identify your market. Where do you want to invest at, right?
And why do you want to invest there?
Why do you want to invest there? And does that market have room for growth still? What you don't want to do is pick a market because you live there and it has a negative population growth and jobs are leaving, right? Like that's not a good strategy long term. So one is you want to pick your market. We also go a little bit deeper with understanding zip code matrices and cluster zones to eliminate risk. But number two is now you got to build your team. Who's going to be on your team? Look, real estate investing is a team sport. It's not an I sport. It is, we're as good as our team is around us. So it's really take the moment, build your team, know who's going to execute with you when you get a deal and you can move forward. And number three is get your money right. Because when I say get your money right, I don't mean banks all the time. A lot of people say, oh, well, I can't do real estate because I don't have money. And I get this all the time. So they say, I need to wholesale. Well, the reason they say they need to wholesale is because no one's educated them on all the different ways to get money, even if they got bad credit or no job. That was a shocker for me, Tim, when I got started. When people were like, oh, well, you can buy real estate and never go to a traditional bank. I was like, what? Yeah. They're like, yeah, you don't even need a credit score or a job history. I was like, what? But that introduced me to the creative lending world. And, and so we always teach people, look, you need relationships with traditional banks. If you can get bank bank money, it's the cheapest. But then you need to understand asset-based lenders. Then you need to understand private lenders, and you need to understand what's called bridge lenders.
Right.
So people who surf the web, they hear videos or see people say, oh, get into real estate with 100% of none of your money. And they go, oh, that's a scam. It's not. Okay. When we talk about the acquisition of real estate, you can absolutely pull an asset-based lender to buy the front end of the deal, and you can pull a bridge lender in to fund the difference, construction or whatever. So you are in that real estate deal with none of your money in most cases. Now, do you have to have money to get into real estate? Yes. Because you still have to have systems and marketing dollars and tools, and you got to have these other things to help you progress, right? Computer, internet, phone, right? You got to make phone calls. But can you still go and take down a deal with none of your money? 100% you can.
Yeah. Well, let me ask you this, though, because I want to go back to the steps 1, 2, 3. Like in my business, if we're working with a buyer, the very first thing we have them do is figure out the money.
Yeah.
I'm not going to take you and show you a single house until you go out and get pre-qualified with a mortgage company or show me some kind of proof of funds.
That's right.
So for investors, shouldn't that figure out the money really start at the beginning before they go shopping for properties and putting the team together?
Amen. That's why we're always telling people your foundation is market, team, funding, right? Because even when we say your team, and part of their team is a real estate agent, when we say, when you're calling real estate agents, you're trying to find who you vibe with, right? You're new. Some agents don't want to work with new people. And I tell them all the time, the first thing the agent's going to ask you is, are you qualified? And I'm like, and you haven't gotten to the funding yet, so you need to tell them that. Say, hey, look, right now I'm building my team, but my next move is to start finding my lenders who are going to fund me. And then before I go look at houses, I'll have all this together and I can come back to you.
Yeah, and that's the way it should be, because we do get a lot of inquiries. Again, it's from newbies, and we were all new at one point.
All new.
I mean, all of us, even this old fart, right?
Fell on my face a few times.
Yeah, but we get a lot of phone calls. And here's the phone call. Hey, I'm in California. I work for one of the tech companies. I have a buddy who has a rental house in Huntsville. I want to start investing there. Can you go find me a property? And of course, then when you start asking, well, what kind of money are we talking about? Well, usually it's way less money than you can buy a tool shed for here. Yeah. Well, I've got 75 grand in my savings account. You're not going to buy anything here.
Go to Birmingham.
True. I didn't say that, you did. But they're kind of unrealistic. And what I always tell them is, like, look, you're in this market, if you can get anything for 100 grand, I'm sure you can, but it's going to be really tough. Number one, it's also competitive here.
Yeah.
You cannot swing a stick without hitting a would-be investor.
Yeah,
so I think a lot of it has to do your homework. This is a great market to invest in.
Oh, 100%. Long term.
Yeah. Well, let's talk about that, because Huntsville's at the top of every list.
Yeah. All
best places to live, raise a family. Give me your thoughts on specifically investing in a market as hot as Huntsville.
I think that if you're investing in Huntsville, well, let's just narrow this down to either investing as fix and flip or investing as holds.
Okay.
You'll never go wrong in this market as a holder.
Yeah. Property values are always going to go up.
Property values will always go up, and that's just historical data, right? The challenge that we're seeing right now on that side, and I'm going to come back to the flipping side, is that there are a lot of out-of-state investors who have come in and inflated pricing.
Totally.
Because what they can buy here, they can't get in their market. Well, the downside to that is listen very carefully, is they inflated the prices by the forced inflation of rents, which means they have to keep forcing rents higher to make it cash flow. Well, when excess inventory hits the market, rents are going to go down.
Correct. Yeah.
And what that means is those investors are going to have a hard time. And so there will be more opportunity coming our way of inventory from those investors. But if you buy right and you buy in a decent area with a decent asset, with your at least over the 1% rule, in essence, you will be good in the long term. I'm a believer, if your long-term strategy is buy and holds, don't buy anything that's already 70, 80 years old, because by the time you get ready to leave it to your kids, it's going to be 140 years old and they don't want it.
well, that's when they call somebody like me. So, let's talk really quickly about the 1% rule.
Okay.
Because, and I don't know if Bigger Pockets started that. I don't know if it was you.
I didn't. What are you
Someone,
talking about?
tell us what the 1% rule is. And honestly, I'm not sure you can get 1% in this market.
So let's talk. Okay, so I do not, and I never teach it. I don't do it. I will ever buy a piece of long-term asset at a 1% rule. I just
Explain
don't
the 1% rule.
So the 1% rule says, hey, it rents for $1,000 right now. So 1% multiplied by 1,000 says I can pay $100,000 for this. Mm-hmm. The downside to that is if you're paying all out cash, okay, it'll work, right?
Right.
But if you're getting financing, especially in today's interest rates, that $100,000 house is going to have a $700 plus mortgage payment on it. Then you take property management of 10%. Now you're $800. Then you take any extra expenses like reserve accounts, vacancies, maintenance. You might make $30 on that property a month. Okay. And we run everything based on what's called a cash on cash return.
Explain.
So cash on cash return is this property a good investment for my capital? So we say, if I'm going to put $30,000 into this deal to stabilize it, and it's going to make me $100 a month, that's $1,200 of net a year. Mm-hmm. So that net divided by the total cash invested gives me the percentage that my capital is actually making me in that property. So it's not emotional for us. It is just solely, I look at 15 deals a week. Which one is my capital making me the highest yield of return? Mm-hmm. Those are the ones I buy.
Mm-hmm. Are you investing in properties that may not have a great cash on cash return, but the property value, the appreciation is the big thing, especially in this market?
No.
So you're only buying things if they give you some kind of return?
I will not touch anything that does not grow my capital, because remember, I'm still an active investor. Mm-hmm. So as an active investor, my intention is always grow my capital as fast as possible. Now, whenever I get to the top of the bell curve and I'm like, okay, I'm done, I've got enough assets, then it's all about appreciation, because then I'm getting it ready for the children, right? So then it's, okay, I'm willing to let go of some, because here's why. Let's be real. The best cash on cash return deals are typically the C class type properties.
Explain C class.
So C class is just an area where the properties are older, the crime might be a little bit higher, you might have to set a little bit of a higher reserve.
Not your best neighborhood.
It's just not typically the best. The rent to owner ratio is always higher in renters than owners. And so it's not that, look, I'm not discrediting those neighborhoods. I grew up in those neighborhoods. Yeah. It is a great neighborhood for people moving out of, say, the projects or an apartment, and they want a yard and to play. They're happy to have their first house.
Right.
Then you have the B-type neighborhoods, which don't produce that much cash flow because you're paying a lot more for them. $150,000, $200,000, $250,000, which means the cash flow is not strong. But those neighborhoods, as you know, they carry appreciation.
The appreciation's higher.
A much higher rate. So.
Yep. Good stuff. Well, here's what I have envisioned for this podcast, and you can correct me if you disagree, but I think we're on the same page. This area is such a great area. Great area to invest in. But what I want to do is I just want to do a real show. I don't want to do a podcast where we get on here every week and go, invest, the world is rosy and great. I want to be real. Yeah. And I know, and this is one reason why I'm excited to do this with you, because you're very real. Yeah. You don't hold back. And so I think what we can do is maybe on each episode, we kind of delve into a specific topic, like funding. Yeah. Hard money, working with lenders.
The good and the bad.
The good, bad, and the ugly.
Boy,
like
do
contractors.
I have some bad stuff too, right?
Well, that's the thing. I mean, people look at us and they're like, whoa, those are two handsome, successful guys. We've been through some crap in our lives.
Man, I have a book of war stories. And here's the thing. I was just doing a coffee with investors this morning, and I was telling them, like, I'm in the middle of a big challenge right now on a property. Now, don't get me wrong, 21 years into it, I'm in a much different place than when I first started. So today's don't hurt me as bad, right? But when you first start out, those they could wipe you out. And so learning from our mistakes as a president, I have almost 3,000 members in our RIA here locally. I hear their mistakes and their oops. So I think that has more power than just, look how much I made on this deal.
Yeah, totally. And I think that's what will set us apart, because we're not going to come out here and just going to be kumbaya. We're going to be completely honest. Yeah. I'm a realtor. I'd love to sell you a house.
Yeah.
But I'm one of those rare realtors who will not put you in a house that I don't think is right for you.
That's good.
And really, I see that a lot with investing. Yeah. You know, again, everybody wants to jump on the bandwagon, but be prepared. And I think you especially, you have way more knowledge in this than I do. You know, I've been flipping a couple of years. Yeah. Chelsea, my daughter's been doing it a lot longer. But you're one of the goats.
Oh man, I just have fun and I love sharing. I love teaching.
I don't mean greatest of all time. I mean literally a goat with that beard. So. I'm sorry. Go ahead. You're a goat.
Thanks for putting me in check.
You fell right in there.
I did.
I'm going to have to color correct that red.
I did. You put me in check.
Because you are. You've been doing this longer than anybody I know.
You know, I love sharing. I mean, that's why I run the RIA. That's why I do coffee meetings with investors. That's why I do all these things in our local community because of what you just said. Like, yeah, it's great that I've had all this success, but I didn't come from a family of wealth. I built this from the ground up with sure determination and grit and consistency. And I know that it's about ripples, and we use that term inside of our community, but it's about just keep dropping knowledge on people. Just keep sharing, whether it's a process, a system, how to find more leads, how to analyze deals, or even war stories. Like, don't do this because this is what happened. I don't think people really understand, like, because I get asked all the time, Zach, you're a successful investor. Why do you teach people?
Yeah,
because they have a scarcity mindset, right? And I don't have that. I look, there's more here than anybody could ever buy, right? And I feel like at the end of the day, doing a podcast like this or doing my monthly meetings with my community, it's just sharing. It's just sharing, and it's keeping people with the vision of what can happen, but also the reality of it.
Yep, so totally. So, all right, this has been episode 1 of the Investing in Huntsville podcast.
What was this?
Yeah, I don't know what this is. I saw this on the MTV. So anyway, so Zack Childress, tell everybody how they can get a hold of you.
Oh, well, I mean, the greatest way to just really know what I am all about and what I do is go to MadisonCountyREIA.com.
REIA?
REIA. That'll give you our entire community locally. You can click on links to see what our meetings are. We have resources. We have free ebooks. We have videos. And that could take you to our Facebook group, which is McREIA Group, MCREIA Group.com. If you McREIA. If you hit those two, you'll have more access to what we do locally than anything.
Awesome. Well, this is going to be a lot of fun. I hope it's really helpful. Hey, if you guys need retail real estate help, if you are an investor looking to invest in this market, I'm always happy to get on the phone with someone, chat, help you out if we can. We got almost 100 agents now that can get out there and find property for you. I could also hook you up with Zach. So our website is revolve.com. Leave us a comment below. Let us know what you think. Like I said, this is going to be no holds barred, nothing held back. The straight BS.
Hey,
there's our tagline. It's the straight bullshit.
What is the old the marketer? Oh my goodness, no BS to marketing.
Dan
Kennedy.
Yeah, we're gonna put you on the back of a yak or whatever that. Instead of a Brahma bull.
No BS.
All right. Well, hey guys, I hope you enjoyed it. Leave us a comment below. Give us a thumbs up. Subscribe. Zach, we'll do one next week.
Love it, man.
Let's
do it.
Take care, buddy.
See you.
Bye.